What's up, everybody? Hope everyone is having an amazing day so far, and I hope everyone had an amazing Christmas. And can't wait for what's in store for next year for everybody at Outcome Reach. It's gonna be it's gonna be it's gonna be pretty amazing. See what kind of growth we have coming into next year. Um, but yeah. Today's lesson, I really just wanted to go over uh, more in depth, kind of that manipulation of retail patterns. So, uh, manipulation of retail patterns, right? So, but remember we're focusing more on that wedge breakout, right? That's really my main focus, uh, like my main pattern that I like to see. But here's a recent setup right here on USD CAD um, that we just had. We put on the session breaks so you could see the days. But we just had Christmas, right? In here. So we have all of this, Christmas holiday chop right here going on, right? And it's not so pretty, but you know, this is how the markets are around holidays. But what we saw was there was a high right here, right? This high got created, and then the previous week's high was right here. So we're not too far off from this high, right? You see that? So, but yeah, um, what I saw was this previous day's high right here, kind of looking like a buy to sell type of move, right? So the previous day's high is kind of looking like a buy to sell move to me, and I'll explain that in depth later in smart money terms. But what I saw around this previous day's high was that, that wedge formation right here. You see this wedge formation happening clear as day, right? So, you expect either, a breakout to the downside or a breakout to the upside, shooting for a low or a high, whether that be the high of the day or the low of the day or the high of the week or the low of the week or the previous, day's high or low or, like the previous week's high or low, last week's high or low. So, what we saw right here was this wedge, right? This wedge. So we see retail possibly buying out buying this breakout right here, right here, and their stop losses were right under this low, right under that low where this red line is. Okay, so right here we see retail. Let's see retail buying breakout of wedge pattern and stop loss at the low, which was that red line, right? don't follow retail. Don't do what retail does, right? So retail buys this breakout right here and price trades back up. What did I say was over here? This is looking like a that buy to sell move, right? Around where? That previous day's high, you know. So we're on that buy to sell area right here. You can see clearly, more clear, right in this area, right? This buy looking like it, and we'll get more in depth. I'll show you more in depth, but what do you want to do when you see, when you see the banks working? What do what do you want to do, right? You want to follow the banks. That's a small font. Following the bank's footsteps, right? Following the bank's footprints, right? I'm gonna have to make this bigger. Following the bank's footprints. And what else? Finding out why retail, why the majority retail loses, right? Why is that? Because banks need to find a way, right? They need to find a way to induce a whole mass of crowds. They need to find a way to persuade you to, take your money, basically, right? That's their whole objective, right? That's their main job, right? So banks, whoa, what just happened? All right, so banks need to capture liquidity in higher volatile areas before making their real move. Okay, so that's one, right? That's one right there. And how do they do that? Right? So in order to do that, they need to find a way to persuade retail, right? Persuade a mass of retail traders to, how should I say, to get into the wrong positions. Yeah, we'll go with that. So banks, in order to create a mass of liquidity, they have to induce people to buy in or sell in, right? It only makes sense, right? You want to try and bribe somebody to do something. You need to give them some type of scheme or pattern that they've seen before, maybe something that they've actually made money before doing, and then they have retail win only so much just to keep them trading, right? Just to keep them on the edge of that winning feeling, I should say. But yeah, right here we're going to get in depth now on this buy to sell move. So we go all the way to the 1 minute time frame, right? Actually, we can go and check out the 5 minute first. Okay, so on the 5 minute, right, that last up candle before that down move was right here, right? So if we go back right here, there's that entry right there. But if we can even go to the 1 minute time frame. And I don't always recommend doing it, but if you see something clean like this, you can always you know, like right here, you see this down candle and then these last two up candles and then this, this aggressive, more type of aggressive move down right at 3176, right? So let's go 1 minute outcome candle, right? 1 minute outcome candle. Let's go back to the 15-minute time frame and let's see where our entry was. Right there, clear as day, right? That's a clean entry right here. You see this entry right here? Right? So what did they do? What did the institutions do? Institutions come back to mitigate back their buy orders at the 1 minute outcome candle, right? So you see on this one went hand in hand with this breakout of this pattern, but you also see that smart money was played in with this, right? So you always want to follow follow the bank's footprints, like what we were talking about right here, right? So you need to wait and you need to understand where higher areas of volatility are being built up, all right? And it's around those highs and lows, those previous highs and lows, the daily high and low and weekly high and low, right? So, but yeah, we can move on to another example here. Actually, before we move on to another pair, let's see how many pips. Let's see how many pips this potentially was. So 111 potential pips, right, from this going against a mass of traders, right, going against the crowd. So, but yeah, let's look at another example now, and we can go in depth on that one. Okay, so right here we have another example on a higher time frame. This is the daily time frame on GBP CHF, and what something that you could look for on higher time frames like this is monthly highs and monthly lows and previous monthly highs and lows, but these are obviously longer term setups, but still the same concept applies, guys. The same thing happens, right? Over and over again, right? When you understand, what the banks are doing versus what retail is doing, right? Get you start to see the market in a different perspective, right? You start to get a different understanding of how things actually really happen. So in this area right here, right away, I see this wedge right here, forming this type of wedge. You could go this way too, but but we have this type of wedge right here, this little breakout, right? And the thing that I see on it was the month of December right here. The high of December is right here, okay? And then we go through to January, the next month, obviously, and the high of January is this long wick. So we're gonna put a right there, right there. So you could say, you could put a line going across right here and say that this is last month's high, right? Last month's high, we see price, trade above that, right? And in retail, in retail mindset, a lot of the times, when they see highs and lows, being broken, like structure per se, you see structure being broken, they automatically want to think that that's a like a shift in the trend, and that's not always the case. Okay, so understand that just because a high or whatever gets broken or a low gets broken, there's actually more of a chance of there going to be a some type of reversal at highs, right? So if we have this right here, let me get a different color actually. Oh, whatever. If we have this right here, and then we get to this high, right? Retail, why would we want to look for buys, right? If even if this market is going to go higher, we would still want it to pull back to wait for buys. So while retail is getting caught up in here, institutions are bringing price down, for a better demand, right, at wholesale prices, right? So it just doesn't make any sense to, buy the top, like buy the top of a breakout of a wedge pattern, and it doesn't make sense to sell the bottom, right? It doesn't, because when price breaks to the upside, the orders being right here, that's just more money piling up in that area, right? So your chances of being stuck where there's piles of money means that you're probably you know in an area where there was retail. But you see after this breakout right here, let me change this color. You see after this breakout right here, uh there was that M type of formation, right? And then you see this wick to the high, right? This wick right up here to the high, okay? So this all happened in a one month span, right? All of this happened in 1 month right here. So that's crazy that, and of course your TP would be at the low of the month. So right here you could say, I want my TP, you get either, I don't know which TP it would be for you, TP 1, 2, 3, I don't know. But we're in the month of January, right? So the low of the month right here, right? And then February's right here. So, but yeah, you know, you get in up here and you take this down. This is 716 pips. That's a trade. That's a trade right there for a max of, you know, 1200 pips, right? That's a really, really good trade right there. So, but yeah, let's look at another example. Okay, so here's an example we have on Ripple, and what we see, right? We're just gonna make this one pretty quick. But what we see is, you know, you see this long, you know, type of drop right here. It's kind of looking like a sell to buy, you could say, potentially. You know, just looking at how, you know, this wick right here, and then how this came down in such a way. But what we see right here is this structure like this, right? And then look at this aggressive move to to the downside right here. You see that? You see how price moved aggressively down? But where did it move down to before reversing? Where did it move down to before reversing? Right here. Look at this. So previous day's low, right? Right. Previous day's low. Would you look at that? So price dips just barely under this previous day's low here. Let me delete that so we can see better. But we see retail. Maybe they were getting induced to sell right here. So retail selling breakout of wedge, right? The banks inducing retail right here to sell, and then possibly go in fear because, you know, they see price moving down at such an aggressive pace, right? And our entry, you know, right there, right under that dip of that previous day's low, and we had 4 pips of drawdown for 185 pips in 2 days on this, right? So that was simple, you know. I hope you guys starting to understand these highs and lows, tie them in with smart money, right? I wonder if we can go to 4 hour and check something here. Maybe even the 1 hour. Okay, so not quite. Unless you used this one right here. But, you know, we don't want to, you know, we don't want to try and, you know, act like, you know, perfect things. But, you know, these last couple down moves right here, you know, but you understand the concept that, you know, retail thinks that, oh, since there's a breakout of something, or if, you know, oh shoot, a low got broken right here, so this must you know, this low right here got broken, so this must just, you know, keep going down, right? Not always. You know, low got broken here and, you know, reversed the opposite way. So, you know, I hope, you know, this helps you start to see the market in a different perspective than maybe what you're used to seeing, right? And you know, once you start practicing and back testing with this stuff just starts to click, right? Right here, look, price dips above that, maybe high of the week, or maybe is 2 days ago, but there's a high right here. And then we see this breakout above this day's high right here, and then this day's high, right? And at the top of this formation right here is this M pattern right at this high. Okay, so if you just practice this stuff and do enough repetitions, it will start to click for you, and you'll be starting to catch 100+ pip trades in a less amount of time, right? Because when you trade in line with the banks and get behind their moves, which have billions and billions of dollars, you know in the orders that they're in the positions that they take, you're more likely to catch faster profits like this. Like you see this faster drop right here, instead of this type of consolidating uh movement, right? So I hope that this helps you guys out, gives you a little insight on highs and lows, and how you can see different forms of liquidity, not just always equal highs and equal lows, because that's just not the only form of liquidity. But let's just be real about it. That's not the only type of liquidity that gets built up in the market. You see different types: retail patterns, head and shoulders, wedges, falling uh, wedge. I don't even know. That's why I like this one the most, because it's a high probable trade setup. When you incorporate this with smart money, it's very high probable. Matter of fact, let me just go and look at this setup on the 5-minute time frame right here. So look at this last up candle before the down move, right? So we'll go at the open and 50%, right, of that last up candle before the down move. So even if you incorporate smart money in with this, your entry would be right here, right? That's still a really good entry for the profit that you're getting, right? 92 pips. You can look at this on the 4-hour and see, I mean, your entry is up here, right? Oh, shoot. There. See, your entry is up here. And actually, this is the trade that I just showed you guys, the trade that I took on Ripple, actually, a couple days ago. If you guys are in, the Outcome Reach Telegram group, you'd know that I am actually in this cell right here. But yeah, hope this gives you guys some, extra confirmations, extra boost to your trading. Hope you guys enjoyed this lesson. I know I did. I like these setups, incorporating it with smart money. It's very simple once you practice it, and put use of the tools that you learn, right? Put it all together, right? It's not just a one ingredient chicken soup. You know what I mean? You know what I mean? You got to put all the ingredients together, and that's where you as a trader start to form and grow and see progress in yourself. So, yep. I enjoy all you guys. Bless you all. I hope you had a amazing holidays, and I'll see you guys in the next lesson. Peace out.